Hello, and welcome to Virtual Investor Conferences. My name is John Viglotti, and on behalf of OTC Markets, we're very pleased you joined us for our annual OTCQB Venture Conference. We'll start today with a live presentation from Millennial Potash, a potash exploration company. And please note you can submit questions for our presenters in the box to the left of the slides, and you can also view a company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I'm very pleased to welcome Farhad Abbasov. He's the chairman and director of Millennial Potash Corp, which trades on the OTCQB venture market under the symbol MLPNF and on the TSX-V under the symbol MLP. Welcome, Farhad.
Thank you very much, John, and thank you everyone for your interest in the company. Today we're going to be talking about Millennial Potash, but before we get going with our project in West Africa, I just want to introduce our group. Our group has been together for almost 15 years. We've done quite a few mining projects in the last decade and a half. The most recent project was Millennial Lithium, which we took from about a $30 million market cap to about $490 million last year. And we sold it to a company called Lithium Americas. And we've done similar projects in the past to what we've done with Millennial Lithium. And Millennial Potash is our third potash project. And again, the model hasn't changed. Exact same idea, exact same approach, whereas we take projects at early stage and take them through all the development stages to the point where a feasibility study is completed. And then we usually exit through M&A transactions, but in the past, we've also built the project and started operations as well. So I'll start with Millennial Potash first with this slide, which is, I would say this summary slide basically encapsulates all our advantages. What we're looking in the projects are the following. We want to make sure the project has been explored in the past. That's very important. We don't get involved with what we call moose pasture projects. In other words, nothing that hasn't been drilled in the past or hasn't seen seismic work, etc. The second thing that we'll look at is the jurisdiction. That is critical, sometimes as important as the project itself, because A, we want to be able to attract capital into this country. B, we want to be able to get permits. And C, we usually exit through M&A transactions. So that means that we should be able to attract a major or a strategic buyer into that particular jurisdiction. So the country has to hit all of those points for us to get involved. And that's exactly is the case with this particular project. It is in a country called Gabon in West Africa, probably one of the wealthiest countries in Africa on GDP per capita basis, oil and gas country. The project has been explored in the past, and that's very important. In fact, it has a resource estimate on it already. I'll talk about it later on in the presentation. This is our third potash project, which I already mentioned. Again, you'll see some of the members of our team that has done a great job in the last 15 years or so. Potash sector itself, we think it's going to be very robust for the next 3 to 5 years. That's the window within which we usually develop these projects. So we think it's going to be a very interesting time for the potash sector in the next few years. And we'll put together a very aggressive development plan. We're already actually putting that into action. We're starting to drill in the next couple of weeks. Again, I'll walk you through the timelines of what we're going to achieve in the next few weeks and months. So let me tell you a little bit about the team. Again, I told you briefly what we've done in the past. So these are the companies that we've built and sold under my name. But a couple of other people here that are important, I think, and critical to the success of this project. Jason Wilkinson, he's our Chief Executive Officer. He used to be Chief Operating Officer of Atlanta Potash, where I was the CEO. And again, we took it from very early stage, about $10 million market cap, all the way to under $70 million when we sold to an Israeli company called Israel Chemicals. And Jason was the key member of the team that actually built the entire project from scratch in Ethiopia, in East Africa. So he's back in again in Gabon, doing the exact same thing. Another person of note here is Rick Lacroix. Rick used to be the Senior Vice President of Potash Corp, which is known today as Nutrien. It is the largest potash producer in the world, and he was in charge of all the operations there, all the production facilities. He was also a director of Campotex. Campotex is an overseas marketing arm of Canadian potash producers. So Rick knows everything from production all the way to marketing of the product. Again, this team that you're looking at here has been together over 15 years now. A few words about the potash sector. Now, some of you probably know, it is highly concentrated industry, meaning that geographically concentrated. There are only about half a dozen countries that actually produce potash. Almost 70% of the world's supply comes from three countries: Canada, specifically the province of Saskatchewan, and then Russia and Belarus. So in the last couple of years, the sector has seen two major shocks to the system. One was the COVID disruptions that sent the price up to about $900 per ton. The price has come down since then, of course. And the second thing was when Russia invaded Ukraine last year. And that also sent a shockwave throughout the industry because, as I mentioned earlier, Russia and Belarus are large producers of potash. In fact, between the two of them, they supply about 35% of potash to the global markets. And the EU has singled out the Belarusian potash industry and slapped severe sanctions on the country's potash sector. So about half of Belarusian potash is not coming out to the market. And I would say probably 25 to 30% of Russian potash is not hitting the market at this point. Having said that, there's still quite a bit of potash coming from both countries, mostly going over ground through Russia to China and then on to India and so forth. But most of the seaborne potash coming out of Belarus and Russia is stuck in their ports and storage facilities right now. So let me tell you a little bit about Gabon. Gabon is a relatively small country in the western part of the continent of Africa. It is only 2 million people, so it's a relatively small population. It has been oil and gas producer for the last 30 years, so the country is pretty wealthy by the African standards. I think it's probably the wealthiest country outside of a couple of islands, again, based on GDP per capita. What is important about Gabon is two things. One, it has been very business friendly. In other words, there are quite a few large foreign, specifically Western companies operating there, and they've been there for quite a few years. And they've had really good time there, meaning that they've had very good interaction with the government. The country has been stable both politically and economically for almost 30 years, thanks to oil and gas revenues. And about 4 or 5 years ago, the country or the government has decided to diversify away from oil and gas and start opening up some other industries, other sectors to foreign direct investment. And one of them was, of course, the mining industry. And they revised their mining laws about 4 years ago. And since then, some large mining companies have come into the country, have entered the fray. One of them is Eramet out of France. They produce manganese. It's a very large manganese production center in Gabon. And another large company is out of Australia called Fortescue, and they're developing a very large iron ore project there. And on this map, you can see our project here as well. It's a quite large project, actually. I'll show you in more detail later on. So you can see a few photos here of some of the infrastructure nearby. Just a couple more things about Gabon. It is a Francophone country. Despite that, they decided to join the British Commonwealth last year. That was a very important political decision on the part of the Gabonese government. So they basically wanted to send a message to mostly English-speaking countries, but beyond that as well, that they're open to business from countries other than France. Now, of course, France has a huge the huge investments in the country, and they deal with France on many matters and industries and so forth. But they really want to open up the economy and the market to other countries as well. So they're welcoming non-French companies into the country. So you can see some of the photos here. This is from previous exploration. You can see these drill cores from a past exploration. I'll talk about it momentarily. All of these drill cores are actually on our side intact. In fact, we've sent them for reanalysis, and as they come back, we're actually putting them out in news release as well. So let me tell you what kind of exploration programs have taken place there in the past a couple of decades. So You can see our property here, about 1,200 square kilometers. So it's a very large area. But the southern part of it actually has seen extensive exploration in the past few decades. Now, the first campaign was in the late 70s. And this, you can see these red dots, Banyo 1 through Banyo 5. Those were oil and gas wells, hydrocarbon wells, drilled by a French oil and gas company, obviously looking for oil and gas. They drilled down to about 1,200 meters. They haven't found any oil and gas, but they intersected quite thick potash horizons. And I'll show you the stratigraphic columns later on in the presentation. And then fast forward to 2017, 2018, 20 kilometers to the northwest of this area, an Australian junior mining company came to Gabon, and they drilled 3 holes targeting potash specifically. All 3 holes hit potash, starting at a shallow depth of about 230 meters. So I'll show you on this slide here. So this is a stratigraphic column of the original, one of the original drill holes. This was a hydrocarbon well. As you can see, they went down to about 1,200 meters. All the green layers here, these are all potash horizons. And then 20 kilometers away, these are relatively recently drilled holes, again, by the Australian junior. And again, you can see all these layers. These are all potash horizons. Now, in the south, as you can see, they are very thick. We're talking about probably up to 100-meter thick. And here, again, they're pretty thick as well, probably about up to about 30, 40 meters in total. Now, based on these 3 holes, let me go back to this map. Based on these 3 holes, in other words, not taking into consideration the historical holes or anything in between, just these 3 holes, the Australian company put out a JORC-compliant resource report or resource estimate of 1.7 billion tons at 16% KCl. So in other words, when we looked at the historical data, we could already tell that this project has a very large resource already in situ. And for us, it's now important to make it compliant with Canadian standards, but also expand it further. So we think that, realistically take into consideration the thickness of what has been found in the south, as well as 2D seismic interpretation I'll show you later on in the presentation. We think that the mother lode of potash is in the south. So by the time we've finished the drilling program, both in the north and the south, we think we'll be able to increase the original Australian resource estimate, probably twice or maybe 3 times. And again, I'll talk about what the plan is going forward. We're going to use solution mining to extract and process potash here. Solution mining is a well-proven methodology. It's been in use for decades. There are 3 major solution mines, potash solution mines in Saskatchewan, in Canada. There's another one in Germany. Both of our previous 2 potash projects, Potash 1 in Saskatchewan and Alana Potash in Ethiopia, they were both solution mining amenable as well. So we're quite familiar and comfortable with this approach. And the reason we like this solution mining approach is very simple. A, it affords you significant savings on the capex side, keeps your capex low, and you can also start in a modular fashion without losing on the economies of scale. And the second thing a lot of people don't understand or underappreciate is that it actually truncates or shortens your permitting process, meaning that because it has a minimal environmental impact, but as you can see, it is because of the nature of the works, you can actually get permits much faster. So basically what it is you drill into the ore body and you pump saline solution into the ore body, you dissolve potash on the ground, you pump it back up to the surface, and then you basically separate potash from salt and other elements that is in the deposit. Again, it's environmentally benign, and in our case, we have huge advantage, not only because of the thickness of potash layers that I've shown you, but also because we're on the coast, meaning that we can actually use seawater to pump into the ore body. In other words, we don't have to get in, fresh water, industrial water, brackish water, anything else from the ground ourselves, and then add salt to it and then pump it into the ground. We can actually use seawater. In many other parts of the world where they try to use solution mining, they have to obviously source water locally. They're not close to the coast, to the ocean coast or the sea coast. In other words, they don't have access to seawater. And that's one of the major challenges for a lot of projects, including in Saskatchewan, because obviously getting water permits is increasingly challenging worldwide. So in that regard, we're going to have a huge advantage. So I'll show you a few pictures here. Unfortunately, these are a little bit dated. We have new photos because we already have the camp fully operational and many other elements. So we will be probably updating the presentation in the next few days as we're mobilizing now to start drilling in the next couple of weeks. So just a couple of slides here to give you an idea about logistics. So we are on the coast. There is a port that is already operational about 60 kilometers away, but we're not going to use that one because there's another new port being built by another party, by a third party. And that port is specifically built for resources, for potash, for iron ore and timber. And not only will we have access to that port, but we're also negotiating an MOU with this port developer, whereas we can actually build our processing and storage facilities on the port side. And that will take a huge burden off our shoulders because that means that we don't have to build all of that on site, on our side. All we need to have is well field. So basically, we'll just pump the brine back to the surface, and then through pipelines, we'll pump the brine all the way to the port side, and we'll go through processing and then, of course, shipping on the port side. And it has a huge advantage because we don't have to extend either natural gas pipelines or power grid, etc., to the site itself. So just briefly, this is the 2D seismic that was shot a few years back on the property, and we've just reinterpreted it. As you can see here, just to explain what it means. This is what we call evaporite sequence, a salt sequence within which potash horizons are contained. The thicker the sequence here, the higher the probability that actually those old potash bearing cycles will be contained there. And as you can see in the south right here, the thickness is about 800 meters, and in the north about 400 meters. So as expected, and it's correlated quite well with the drill holes as well, that in the south we think we'll have a lot more potash than in the north. So just again, an insight into what's happening in the potash world in terms of supply and demand, and of course shipping costs, and again our advantages vis-a-vis all of that. So you can see on this map that basically there are only about half a dozen producers in the world, large producers, and about 70% of world supply of potash comes out of Saskatchewan and then Russia/Belarus. A little bit of production in Germany, in the Middle East, Israelis and Jordanians, and then in West China. And then there's a smaller production in other parts of the world, but they're really insignificant compared to those. And the rest of the world is obviously a large potash consumer. Now, the largest importer of potash in the world is Brazil, about 12 million tons a year, followed by China and the US, 10 million tons each, and then India about 5 million tons. As you can see on this map, once in production, we will be the nearest supplier to Brazil. We'll also be closer to India and China than most of the producers based in the Northern Hemisphere, and will be equidistant to the eastern seaboard of the US compared to the ones out of the Middle East and Europe. Now, most of the potash out of that the western and western states in the U.S. and Midwest require it comes from Saskatchewan, but the eastern U.S. states, they still actually buy potash from elsewhere. Until recently, they were buying even from Russia and Belarus. So we'll have a huge advantage in that regard. Now, the second thing is the pricing of potash. Now, it is actually quite different. India and China pay about $320 to $350 per ton. Brazil on contract basis about 400, on a spot basis about 345. The highest paying markets are Western Europe, Eastern US, and Africa, over $400 per ton. Obviously, we'll be placing some of our product in Africa itself because we'll be able to actually fetch a much higher price. And then the reason the Africans end up paying higher price is that they don't have the same consolidated purchasing power as the Indians and the Chinese. So in addition to that, by placing our product in Africa, we'll also get quite a bit of financing support from development financing institutions based in Africa or focused in Africa as we go forward. So brief again on our timelines. In the next few weeks, we will be drilling the northern part of the project. The plan is to actually drill it out and put out our maiden resource estimate in November. And then based on that maiden resource estimate, we're going to go into a preliminary economic study, which is a kind of a scoping study. While we're doing a PEA, we'll move the drill rig down to the south and we'll start drilling the southern deeper potash horizons there. And then early next year, we're going to finish the PEA, but also we're hoping to also put out the expanded revised resource estimate by the end of the first quarter next year. And then at that point, if both are very positive, then we'll go into a feasibility study probably in the second quarter of next year. And that will take us probably to the end of 2024 to finish feasibility study. But environmental studies usually take about 12 months. So that should be done in the first quarter or second quarter of 2025. But until I think the end of the year, early next year, we're going to have quite a busy and full news pipeline because of the drilling and, of course, the PEA and so forth. So cash-wise, we have this number is the old number now. We were just raising another $2 million. In fact, we announced it recently, so that money is already done. But obviously, we can take more because we're still getting quite a bit of interest in this raise. So the $2 million that will come in addition to whatever we have in the bank, will be enough for us to finish the first stage of drilling and the maiden resource estimate. And then after that, we'll go into PEA. And most likely we'll be raising another tranche of capital at hopefully at a high price, either later this year or early next year. So that's the presentation, ladies and gentlemen. Just to summarize everything, it's in a very good jurisdiction, probably one of the best jurisdictions in Africa. Previously explored projects, so we think it's by the time we're done with this, both in terms of the resource size and quality, we're going to have a world-class project there. We'll also be probably lowest cost operator in the region, and in general, our cost structure will be one of the lowest in the world due to the location and the deposits characteristics. So, and we also think that the potash sector is going to be pretty robust. The price of potash we think is going to stay above $300 for the next 3 to 5 years, which will allow us to develop this project into something that we can either put in production or actually exit through M&A transactions. So I'll start there, and if you have any questions, I'll be happy to answer. And I see we already have some questions. Okay, so I'll start with that. So the question, has the Banyo project been previously mined for potash? No, it has been explored, as I mentioned earlier, in the past twice. Well, the first exploration program was not really for potash, it was for oil and gas, but they did intersect quite a bit of potash. The second program was done in 2017, 2018. That was specifically for potash. So we have all those drill cores. And those drill cores, in conjunction with the 2D seismic and historical data, actually give us quite a bit of confidence that we have a significant potash potential here. There's another question here. Plant time it will take to put the drill holes in. So drill rig is already on site, and we've been waiting for some spare parts and muds to arrive, and they've actually arrived already. So we are going to start a drill program next week, and that means that probably starting early September, we'll start getting some drill results back. And so for now, we seem to be on track for maiden resource estimate in November. And there's another question here. Okay, so the question is just a short, it's a question about the construction phase. If the feasibility study is successful, how much cash is usually needed to bring the project to production? So it really depends. It's a very good question. It really depends on the size of production that we're planning. At this point, we're planning to start with only 400,000 tons. And that should be enough for us to get going, because that will actually be pretty profitable. At the same time, it will keep our capex low. So we're thinking that it will probably be around $350 to $400 million to build this project. Most of that construction funding will come through debt, through development financing institutions. When I say DFIs, these are institutions like International Finance Corporation, based in Washington, D.C., African Development Bank, Export Development Corporation of Canada. We've worked with all these organizations in the past, specifically with Alana Potash when we were developing our potash project in Ethiopia, and we put together significant debt package for that project. Our capex requirements for that project were much higher, about $750 million, but we could actually put together a debt package for almost $600 million, coming exclusively from these organizations. And we think that we can do exact same thing when the time comes for construction financing. So we think we can probably lever this up, gear it up to 70-75% debt, and the rest will be equity. There's another question here. Okay. So the question is about new power plant at Mayumba. Mayumba is the city, the town next door to us, well, about 50 kilometers away. Do we have an ESG program in place? Yes, actually, an interesting level, although it's pretty early, but we've done this many times, and we start with the ESG right off the bat. It's an amazing question, actually. Not too many people ask this type of question of early stage exploration companies, but yes, we do have that in place. In fact, we've been going through it recently, and it is ready to be adopted by the board. And we're working very closely with the government of Gabon in addition to that. And the group that is developing the port that I mentioned during the presentation actually is mandated to develop all the logistics there for different organizations, including ours, but making sure that everything is actually in compliance with all the environmental standards. Now, I mentioned that we worked with IFC in the past. In fact, IFC was an investor in Atlanta Potash, in our previous potash company, and we had to comply with all the IFC standards. And that's exactly what we're doing here. Right from the beginning, we usually comply with all the IFC standards. So yes, ESG is on the top of our minds for sure. So next question is, when do you expect your PEA to be completed? So the plan is to put out the maiden resource estimate in November and then immediately go into PEA. So we're actually, as we speak, we're already sending RFQ for PEA to different groups. So we're hoping that, obviously that will be done. It will be signed and ready to go as soon as the maiden resource estimate is completed. So we're talking probably late November, early December to start on the PEA, and we're hoping to finish PEA by the end of the first quarter next year, the latest. Another question. Okay, what is the plan if we take this to production? Okay, so usually we develop these projects on what we call on dual track basis. So one is when we, on one track, we want to make sure that we can actually keep the CapEx and project manageable so that we can take this through all the stages of development, but also finance it and put it in production on our own. And the second track is to basically confirm a very large resource, attach very strong economics to it, and also to show to the market and specifically to potential acquisitors, potential strategic buyers, that this project can actually produce a lot more than what we're planning to do on our own. And that usually works very well in combination. We've done that many times in the past, because without the former, you cannot really achieve a better value during your M&A negotiation. So that has worked very well. And as I mentioned in the past, we've put together financing, but we'd never pulled the trigger because we got offers, and we usually get significant premiums. So we end up selling the companies. But with Millennial Lithium, we ended up getting almost 40% premium. With Atlanta Potash, we got 50% premium. So our main focus right now is to take the project to the point where it's almost completely de-risked, meaning the feasibility study is done. So there are significant economics or robust economics, and also obviously confirm a very large resource. And at that point, by that point, we also know where we stand, whether we're going to be actually going solo building this, or we'll be exiting through M&A transaction. So that's about it with questions. And again, I'd like to thank everyone for your interest. You will be happy to actually have one-on-one meetings as well later on. We're available. We have a couple of team members on this call as well. So for the next few days, we'll be more than happy to again have one-on-one meetings so that we can answer more questions that you might have.